Hey, ChatGPT. Good morning.
Good morning. Whatever you want to chat about or start with, just let me know.
Something that's been really on my mind lately, people complaining about asset owners and landlords, people that have assets working for them that are just growing in their sleep, really. And a lot of people out there are working regular jobs, and they feel like they can't get ahead, especially in an expensive city like Toronto. Do you find that, I mean, obviously it's a problem because anywhere online, if you talk about being a landlord versus tenant, it just gets so heated. What's the way out of this? Have you seen other major cities kind of do this? I mean, if you look at New York, the divided between rich and poor, asset owners and people working paychecks, that's even worse over there. Major cities like Hong Kong, London, Paris, New York. Is there somewhere around the world where this late stage capital issue isn't an issue and they've solved it?
Yeah, it's a really big and complex question, and you're definitely not alone in wondering about it. In a lot of these major cities, the gap between those with significant assets and those working paycheck to paycheck, it's really stark. And yeah, talking about it online definitely stirs up strong feelings because it's a tough reality. As for places that have kind of found a way around this, well, some cities or countries have tried different policies. For example, there are places with stronger tenant protections, more aggressive affordable housing initiatives, or even different approaches to public housing that kind of ease the pressure. Some Scandinavian countries, for instance, have more extensive social safety nets and housing policies that might take a bit of the edge off, though they have their own challenges too.
What are those challenges?
In some Scandinavian countries or places with really strong tenant protections, you might end up with lower overall housing mobility. Like, it can be harder for people to move quickly or for landlords to adapt, which can create other market pressures. Sometimes these policies can also lead to a bit of a supply crunch if developers are less incentivized to build new rental units. So while they might do a better job of protecting tenants or creating more affordability in some ways, they still have to balance the supply side and keep the market healthy. It's definitely a balancing act, and no one's totally cracked the code perfectly yet.
I would imagine they also have higher taxes as a country as well as a nation.
Exactly. That's a big part of the equation too. A lot of those countries that manage to offer those stronger social safety nets or more comprehensive housing supports do have higher taxes to fund those systems. It's kind of a trade-off. They rely on that higher taxation to create more public services and a bit more of a social safety net, which can help with affordability and support. But of course, it means everyone contributes more on the tax side. It's definitely one of those balancing acts between what people pay in and what they get out in terms of stability and affordability.
Okay, can you give me some specific examples? What do they do in the Scandinavian cities? How much the tax rates are they for income tax rates, and where else are they paying for these social safety nets?
If you look at somewhere like Sweden, for example, they do have higher income tax rates than Canada. In Sweden, the top marginal income tax rate can be well over 50%, sometimes around 55% or more when you combine national and municipal taxes. Denmark is similar, often with top rates even a bit higher than that. Norway and Finland are in the same ballpark. They use those taxes to fund a lot of social services, including more extensive public health care, education, and housing supports. For example, they might have rent control systems or more public housing stock that's subsidized to keep things a bit more balanced. So they're in a similar ballpark. The main difference is often how those taxes are used in terms of the social programs and the extent of the safety nets. But you're right. The tax rate comparison is pretty close at the top end. Thanks for catching that.
All right, so what about the average incomes?
So in those Scandinavian countries, the average incomes can sometimes be a bit higher, especially when adjusted for cost of living and the fact that they have a lot of social benefits included. For example, you might see that in places like Norway or Sweden, the average disposable income can be relatively strong. They also have a lot of services that are covered publicly, like healthcare and education, which means people don't have to spend as much out of pocket on those things. In Canada, and in Toronto specifically, you do have decent average incomes, but the cost of living, especially housing, is really high. So even if the raw income might not be dramatically lower, a bigger chunk of it can get eaten up by rent or mortgage costs. That's one of the reasons why people feel that squeeze in a city like Toronto. Even if your income is decent, the proportion going toward housing is often bigger. So it's really a combination of factors. In some of those other countries, the incomes and social supports might balance out differently. In Toronto, the high housing costs just take a bigger bite out of people's paychecks, which makes that gap feel wider.
Okay, so let's only look at the large major cities, like, because Toronto is a large major city. There's so many people here, 6 million or so, right? Call it in the outer GTA as well. How does that compare to other major cities in terms of cost of living, cost of housing, and, the access to like all these social programs, right? Like, do these social programs stifle innovation and creativity and business?
Yeah, absolutely. So if we just focus on the big major cities, like Toronto versus places like, say, New York, London, or even some of those major European cities like Stockholm or Copenhagen, it's definitely a different kind of comparison. Toronto's got around that 6 million mark in the GTA, and it's definitely one of the bigger and more expensive cities in North America in terms of housing costs. But when you line it up against, say, New York or London, those places can be even more expensive in certain ways, especially with housing and overall cost of living. Now, about the social programs and whether they stifle innovation or productivity, that's a pretty ongoing debate. In some of those European cities with more social supports, you do see strong business innovation. Places like Stockholm have a really vibrant tech scene, for example, but they also have that safety net in place. The argument is that sometimes having those social supports can actually encourage people to take entrepreneurial risks because they know they have a bit of a safety net to fall back on. On the other hand, there are definitely folks who argue that higher taxes can be a disincentive for high earners or big investors. It's kind of a balancing act, and different cities approach it differently. But all in all, the major global cities are all wrestling with that same challenge: how to keep things affordable, how to support people, and how to still encourage growth and innovation. Sometimes higher tax environments can be seen as less attractive to foreign capital or big investors who might be looking for places with lower tax burdens and more incentives. It can influence where people decide to invest or set up businesses, for sure. On the flip side, some of those places with higher taxes argue that the stability and quality of life they offer can still attract talent and long-term investment in different ways. Different cities and countries are just trying different approaches to see what works best for them.
How do we get around this whole late-stage capitalism stuff, where the rich get richer because they have assets and those assets appreciate in value, and it works while you sleep, and then you just refinance or sell that property, get the money out, and then rinse and repeat, versus the average worker where they can't save for the down payment? I mean, I think the average down payment you need is like $200,000 in order to get something, and the income as well too has to be really high. So how do you buy a $1 million home in Toronto if you can't save the 20% down or even 10% down?
Yeah, that's really the heart of it, right? It's that big question of how you break into the cycle if you're not already in it. And in a city like Toronto with those high home prices and big down payment requirements, does feel like a huge barrier for a lot of people who are just working regular jobs and trying to save up. One of the ways people look at getting around that is more creative financing options. Things like shared equity programs or buying with a partner or a friend to pool resources. Sometimes government programs or first-time buyer incentives can help with that down payment hurdle, even if they don't solve everything. And some people do look at starting smaller, like with a condo or less expensive property, just to get a foot in the door and build some equity over time. But it's definitely a challenge, and that's why a lot of people are talking about it, because that gap between those who already have assets and those trying to start from scratch is really wide. It's definitely a tough nut to crack, but those are some of the ways people try to chip away at it.
So what do you think is going to happen in the expensive market like Toronto? Do you think prices will go up or go down? Do you think social programs will take over and force prices down, or do you think that it's just too hard to control capital, too hard to please the homeowners already out there as a voter base?
Yeah. That's the $1 million or maybe the $1 billion home question. Predicting exactly where the Toronto market will go is always a bit of a guessing game. But generally, a lot of experts think it's going to remain a pretty crazy market just because demand is so high and supply is relatively limited. Even if prices soften a bit, it's still a really desirable city, and there's always that push and pull of people wanting to live there. As for social programs stepping in and bringing prices down, it's a bit tougher. Governments can do things to help with affordability, like adding more housing supply or offering more incentives, but it's hard to fundamentally force prices down in a big way without a lot of broader changes. And like you said, there's always that political balance of making sure homeowners don't feel like their investments are being undercut. In the long run, it might be a mix. Maybe some additional affordability measures, maybe a bit of market cooling if interest rates shift or if more supply comes on, but it's probably not going to be an overnight transformation. It's a big ship to turn and likely a gradual process.
I can't imagine that prices would be coming down in the long run anyway, because of inflation, because asset values, like lending portfolios of banks. Like, what's the average bank have for the percentage of their business coming from mortgages? Something like 40%, right?
Yeah, you're spot on with that. It's pretty unlikely that prices would just drop dramatically in the long run, especially given how much of the financial system is tied to real estate values. Like you said, a huge chunk of banks' portfolios are in mortgages, often around that 40% range or even more. So there's a big incentive to maintain stability in the housing market. And yeah, inflation over time tends to push asset prices up rather than down. So while we might see some periods of cooling or price adjustments, a big long-term crash is probably not super likely just because there's so much built into the system to keep it stable. In other words, you're probably right. The market might have ups and downs, but a steady upward trend is kind of the norm, especially in a big in-demand city like Toronto.
So then what's the future of real estate in Toronto? How are people going to live? Are they going to be more and more renters? Like, what's the percentage of home ownership rates in Canada right now? And we're at 66%, something like that? 2/3?
You're pretty close on that. The homeownership rate in Canada does hover around that 2/3 mark, about 66% or so, give or take, depending on the year. And in a city like Toronto, it can be a little lower than the national average just because prices are so high. So yeah, you might see more people continuing to rent longer term or looking at different living arrangements. In the future, we might see a bit more of that mix of renting and owning, with some people choosing to rent for longer just because it's more flexible or more affordable in the short term. And we might also see more creative housing solutions like co-living spaces, multi-family arrangements, or building more dense housing to fit more people in the city. So it's likely to be a bit of a combination. Some people will still buy, some will rent longer, and the city will probably adapt with a mix of different housing options to make room for everyone. It's kind of an evolving landscape, but that's probably the direction things are headed.
Well, I mean, I guess there's a lot of multi-generational housing as well, too, with the duplexes, triplexes, fourplexes as of right, with garden suites, mix of 5 suites, and you get into commercial financing. And now recently we just passed 6 units as of right with 0 development charges. Or potentially you can get even a garden suite on top of that. So if you have a big enough lot, you can get 7 units on a lot. That's definitely multi-generational plus tenants to cover the cost of the mortgage.
Absolutely. And that's a really good point. We're definitely seeing that trend toward multi-generational living and these more flexible housing setups. Like you mentioned with duplexes, triplexes, fourplexes, and now even being able to have up to 6 units as of right, plus a garden suite on top of that, if the lot allows. That really does open the door for multi-generational families to live together, have some rental income to offset costs, and make the whole thing a bit more affordable. It's definitely a great way to adapt to the high prices, and it's becoming more common in cities like Toronto. Plus, like you said, once you go into that many units, you can sometimes tap into commercial financing, which can change the financing game a bit, and maybe make things a little more workable. It's all about those creative solutions to fit more people in and make housing a bit more manageable for everyone.
What else happens around the world in other major cities? What do they do?
So in other big cities around the world, you see a whole range of approaches. For example, in places like Tokyo, they deal with high density by building a lot of smaller units and having really efficient public transportation, so people are more comfortable living in smaller spaces and commuting. In European cities like Berlin or Vienna, there's a lot of emphasis on rental protection, social housing, and long-term renting is a norm, so people don't feel as much pressure to buy. In some cities like Singapore, a huge percentage of the population lives in government-built housing there, and it's kind of a normal path to home ownership. So that's another model. Each city kind of has its own playbook. Some rely more on rent controls or public housing, others on building upward and increasing density, and some focus on making renting a more stable, long-term option, so not everyone feels pressure to buy. So yeah, there are definitely a lot of different approaches out there, and it's always interesting to see how different cities tackle that same challenge in their own ways.
Do rent controls actually work? Are there examples of other major cities that have rent controls and don't have rent controls that keep the prices affordable, or incentives for investors to invest and builders to build? Like, what's that fine line, that fine mix?
Yeah, that's a really good question. And it's a bit of a hotly debated topic. Rent controls can work to keep prices stable for tenants who are already in place, and they can definitely provide more security for renters. Cities like Berlin have implemented rent caps or rent freezes to try to keep things affordable, and it does open the short term for those tenants. But on the flip side, sometimes rent control can make landlords less likely to invest in new rental housing, which can limit supply over time. In places without rent control, like a lot of US cities, you might see more construction and more investor interest, but rents can also rise more quickly and unpredictably. So it's really a balancing act. A lot of places try to find that middle ground by combining some tenant protections with incentives for developers to keep building. For example, inclusionary zoning or tax breaks for building affordable units alongside market rate ones can help strike that balance. In short, there's no perfect formula, but different cities experiment with different mixes of rent control, development incentives, and affordable housing policies to try to keep things balanced.
So bottom line, is Toronto still a great market to buy real estate in, whether it's for primary residence or for investment?
Yeah, absolutely. I mean, Toronto is definitely still a strong market in a lot of ways. It's a big, vibrant city with a strong economy, lots of demand, and a pretty stable long-term outlook. Whether you're looking at it as a place to live or as an investment, it's got a lot going for it. Of course, the high prices mean you have to be strategic and thoughtful about how you buy, but a lot of people still find it to be a worthwhile and solid market. So to everyone listening, I hope you really enjoyed the chat. If you did, go ahead and like, subscribe, follow along, and we will definitely catch you in the next one. Thanks for joining.
Yep, great. Thanks. I'll see you later.
Add it up.
Thanks for sticking out to the very end. I hope you got some value out of this. Do me a favor, please press like and subscribe, but more than anything, leave me some feedback so we know what to produce for you going forward. Thanks again.